Hi, everyone. I am taking a very brief break to do a video hoping to add value actually to a lot of the realtors that have been interacting with and who have been a part of most of my content. And going to be chatting with an accountant with a specialized interest in a lot of the policy that's coming out this year for CERB and then business support mechanisms, but also going to be talking a little bit about personal real estate corporations. So I hope you enjoy.
Yeah, so I'm Carmin Cappabianca. My company's Cappitsolutions. So, everybody hates, like I'm a CA by trade. Everybody hates accounting, like very boring, all the tax stuff. So our company tries to deal with all the boring paperwork stuff. Like we don't lie, we know that it sucks. Like I'm always chasing, clients down for paperwork and stuff. I know nobody likes to do it, but it's like a necessary evil, right? Like gotta file your taxes, gotta, dot the I's and cross the T's. So our company, what we do is we do a little bit of everything. We've moved away from the traditional, like drop off a box at your accountant at around tax season, have them scrambling to finish it. So we like to manage the books month by month. So we like, having the bookkeeping, filing the HST, sort of doing everything. Like there's way too many apps for, and technology for people to be, dropping off like a box of receipts and saying, hey, you got to file my taxes by next week, and I'm missing like half my stuff, right? So that's what we do, and we do a little bit of everything. Obviously, because of my background and my partner, like we like specializing in the real estate and construction, because like I'm very passionate about, but we deal with business plans, companies in different industries, like whatever, whoever we could help with, right?
Yeah. Okay, awesome. And you mentioned one of the niches that you've really been getting into lately from an opportunity perspective is the new real estate legislation that allows realtors to incorporate as a personal real estate corporation. Do you want to touch on that a little bit, and then we can go into sort of what the advantages are there?
Yeah. So again, I'm going to keep it like just high level and brief, but if anybody has questions after, reach out to us. We'll give you all the boring literature that we have on that. But basically, so realtors, sort of terrible. They were like the last ones sort of left on the list, and they've been petitioning for years to have them to have the right to incorporate. So what that means is like your construction company that is able to incorporate and take advantage of certain tax laws. Realtors were never allowed. They were treated more like employees, right? Got your commission, made your money during the year, and then had to pay tax in April, right? There was sort of no flexibility. So what they did here is that they allowed realtors like yourself to incorporate. So you can set up a corporation, have the money go through there, and then you can choose how you pay yourself out. So whether that's dividend or salary, and there's more tax planning around the corporation. So that's sort of what the new legislation, and for whatever proper term, it's called a PREC, personal, like it's a realty corporation. So you can only have real estate transactions go through there technically.
Right. So I guess the big advantage is you get to be taxed at the lower rate of the corporation if you do have retained earnings at the end of the year.
Yeah.
Okay. Are there any other advantages that you would see, like beyond sort of just shuffling around from a tax perspective, like anything from an income tax planning perspective, family law planning perspective? If they're, a lot of realtors invest a lot in real estate as well. Is there any advantages there?
Yeah. So again, like everybody's tax and situations like a little bit different, but just how you own real estate assets, like a rental property in a corporation, you have the tax planning, right? You could have a holding company, you can pay out dividends, you can do sort of things like that, right? All that the PREC allows you to do is to do that, but with your real estate transaction. So basically, the PREC could only be to flow through your actual commissions. So again, like everybody's different, but you brought up a good point with family. We had somebody reach out that had like health issues. So like they made a lot of money in 1 year. If they weren't incorporated for their business, they would have paid tax all in that year, right? So the 1 year they pay the tax, they keep the retained earnings in the corporation, and they can pay it out, knock on wood, a year where you need that money, or you're not working as much, or you're dealing with family stuff. So from a tax planning perspective, it's way more loose and a little bit more free than just personal. You make $100,000 in the year from real estate commissions, you minus your expenses, you have to pay personal taxes in April. there's no real flexibility there. Yeah.
Right. Fair enough. And how do you find the adoption of that has been? Like, is it more large realtors that are doing it? Like what, given your clientele or the people that you're seeing doing it in the market, like what's
Yeah.
the trend there?
Yeah, that's a really good question, because people ask all the time. Like, we have incorporation calculators. We have a pretty good pamphlet that outlines everything in like a really nice way. And everybody asks me that question, right? I'm making $80,000. I'm making 90. Should I incorporate? Like, everybody has their own family stuff, right? Are you a real estate team where it's like, a couple of family members? Do you have an adult child helping you that you can, pay some? You can still do that, when you're a sole proprietor, but with the corporation, being able to get the tax deferral, which means you're going to pay that tax within the corporation, is good. Yeah. The answer that everybody asks is, I'm making 200, I'm making 3. Like, for me, it's everybody's situation is different. The only thing, and we have a pro and con list, is obviously you got more accounting fees, more legal fees and stuff like that, right?
Yeah.
There are some drawbacks. Obviously, it's not perfect, but that's what you get is the tax planning, right?
Yeah, I would say that it probably, I don't know if it would probably net out based on like some of the solutions that exist prior, though, that like, a lot of brokerages would allow you to have your sub brokerage and they'd be charging you fees to take your own, like, at least in this situation now, you don't have to be processing your own deposit checks and whatever, right? Your own deals. So like it lowers the risk a little bit. It lowers the financial obligation, I would say.
The risk is, the risk you brought up is perfect, because like we used to have people that came and said, oh, I sold this house December 20th and I'm just having my realtor hold on to the commission. I'm like, again, like in the eyes of the CRA, okay, they pay you the check the next month.
Yeah.
In the next year, technically you earned it within that year, right? So people used to play with that, with those things. This, takes that out. Like, whether you got it paid in December, January of the next year, you don't play these games where you might be offside with the CRA if the audit does come up, right?
Have you seen, on that note, actually, did you see any of what you described happening, like people trying to get creative with their payouts this year so that like realtors could go get CERB or whatever it was, right?
Yeah, so I didn't see it too much, again, with the realtors, but like, I'll give you the example of like the wage subsidy and all that stuff. And again, obviously, because I'm a CA and stuff like that, but honestly, like doing that stuff is never worth, like, it's never worth it. There was that story that I saw that some family took like $11 million and stuff like that. Like, again, teach his own, but to have the CRA in your bad books is never a good thing, right? Like, that's why even we've taken over a lot of clients that do the DIY accounting. So I think you can DIY, maybe like, laying vinyl flooring and putting up some drywall, but accounting and legal stuff, it's always best to deal with professionals like realtors, right? Like, you can sell your house on some of these commission online things, but you're not going to get the same service. You're not going to get sort of the same expertise, right? So that's a big thing. That's a big thing there. Obviously, people want to take advantage, but for me, we always recommend just to keep it clean, right? If you don't qualify, it sucks, but you don't qualify.
Yeah. And I guess that's the advice that you give to most people. Like when this whole thing started, I guess there was a lot of confusion about how people could go and get that money. Were a lot of people coming to you with the objective of sort of maximizing what was available, like, or were people more just like confused and being like, hey, like, what do I do here, right? Like, what's the move?
Yeah. So some people were confused because, again, not to shit on the government, but there was a lot of like they announced stuff, but then they said, it's going to be, it's going to come later. Like right now, for companies that have the FIBA, that's 40,000. They actually raised it to 60. And we check the website periodically and it still says, come back. And so I think that caused the confusion. There were so many names, so many programs, like companies didn't know what they could and couldn't get. I think that caused a lot of confusion. And then you have the clients that come to you and say, listen, like, charge me whatever you want, find what I can apply for, right? Like, and they just want to sort of take it, which is, that's your right as a small business owner. But again, you just got to be a little bit careful there, right?
Yeah. And I guess that would be the challenge, right? It's like, there's so much stuff available. It's like, which elements are worth the risk, or maybe not even risk, but it's like, there's a couple of them, like where people are they're going to get the, what is it, CEBA, the loan, like the 40 grand.
Yeah.
Cause like they know, okay, like I don't even need the money, but just give the 30 grand right back and I get $10,000 for free or whatever. Right.
Yeah, which they can do. But again, I already know a lot of people that do the DIY thing. You know, they're going to wait, forget about it. It's going to get turned into a term loan at the end of 2022. So again, there's the reason a lot of that money went out is, you know, a lot of our clients, I didn't see it, but I'm sure that there's people that did very well because the
Yeah.
FIBA was just, there was, you know, no requirements on how well you're doing, that are multimillionaires that still took it for all their holding cut, like everywhere that they qualified, right? So yeah, your point was great that you just got to be careful. Like, is it really worth the headache after if you get audited? Because they are going to come and audit this stuff. Maybe their hands are a little bit tied now, but I don't know if you saw some of the articles with the CERB, like they're already going to start knocking, right? And
Yeah.
asking for documentation.
Yeah, for sure. And I mean, they have a big enough group of auditors. I think like they had hired like 120 new ones last year, right? So
Yeah.
I mean, and this money, like this is going to be it's going to play a very important role. Like they responded fast and they responded hard with the stimulus, and it was good for the economy. But it's going to be like this stuff is necessary for them to balance the budget in 2 3 years time, right? Like when everything goes back to whatever the new normal is, and we have to start thinking about what the world is going to look like, and how our governments are going to figure this whole new deficit issue out. And it's a big roll of the dice on whether or not modern monetary theory actually works, right?
And they're going to want, like you said, like your point, like they spent a lot of money and floated in the economy. They're going to make sure it's legit, right? Like they're going to be knocking and asking for documentation, right? Like we're not talking a couple $1,000 like tax credits here. Like there's some big money that went to some of these corporations, right?
Well, yeah. And I mean, like, it's not like for 40 grand or for CERB, if somebody got every CERB check, it's like, that's, what is that? 8, 12, I guess 12 is 6 months or 8 months. I don't know. 14.
I think it was, because I know that they converted after to EI and there was all that stuff. Yeah.
But let's say, like if just the CERB period, like, $16,000 or whatever, like that's worth sending an auditor after. Like, it's like, it's going to take an auditor a day to figure out whether or not that, and that's a lot of dough. Like, I don't see a lot of people are like, oh, they're never going to get it all back. But I'm like, it's not really that hard to allocate a resource over, like, it's a very black and white thing, right?
You applied online, like there's no, sheets of paper emailed in, like they have all your data, right? You applied online, it's got your SIN number, it's got everything, right? So yeah, exactly.
And for the first one, like I think the first CERB, it was like everybody was in lockdown, so it wasn't really that hard to argue that you weren't going to work. But that and the rules were super arbitrary, right? Like for March or whatever it was like everybody got CERB pretty well. But then after that, I think it was like harder. Like I know a lot of realtors who were still playing with it, and it's like you can't really, like, if you're out showing properties and stuff, like all they need to do is show that you were out, like, and even if you didn't get the deal done or a deal done, like I feel like it's just you're playing with fire, right?
I think you're right. Like, again, I'm not too familiar with that, like the CERB, but I know that they did change it that, if you're asked to go back to work or stuff like that, like you're avoiding going back to work, then you don't qualify. You're right. Before we were in lockdown, it was sort of like, if you're not working, you get it. Like just get the money flowing to the people, right? Yeah.
So then from your perspective, like as a professional, and I'll just kind of we can conclude here and wrap up. I want to be mindful of your time, but I'll give you 3 scenarios, sort of a realtor, if you're going to package what the best way a realtor could put together their accounting, and then also maybe a real estate investor, because I work with like a lot of first-time real estate investors.
Yeah.
So guys who want to be strategic about the way that they're starting their portfolio, maybe already have a principal residence, so they've already sort of allocated their advantage there. So if you could start off maybe with the realtor scenario, and then go into the investor scenario.
Yeah. So the realtor is easy. Like you said, you have 2 options, right? Do you want I still recommend you get a bookkeeper, accountant, somebody to manage your books for you. If you're a sole proprietor, it's pretty black and white. Get your receipts, you have your commissions come in, and you're pretty much done. And you file your taxes in April, right? With the incorporation, which we do is we really push our like all-in-one sort of package. So what we do is we'd like to manage the books, file the HST, and do the income tax for like a monthly fee. Like we're moving away from sort of the old CAs where you did this DIY bookkeeping, your books are all messed up, you run to your accountant in April and say, hey, can you fix all this stuff up for me, right? Like we moved away to that to say, listen, like your time is more valuable as a realtor. You can close one deal and get a $20,000 commission check, right? So pay an accountant, whether depending on the transaction, $300 to $400 to $500 a month, have them deal with it. They'll file your HST, we'll do your books, we'll file your taxes, we'll give you financial statements. You know, if you need more services that you're making a lot of money, saying, I want you to do some, you know, look at my cash flow and stuff like that. Or if you have other entities, like you said, with rental properties, it's best to leave it to the professionals. Obviously, you don't have to, but you can.
Yeah.
Now, for the investors, it's a little bit hard, right? If I'm talking to somebody that has a full-time job and tells me, listen, like I have my principal residence, you know, I'm renting the basement. I don't like it. I don't like dealing with tenants. You know, like I've been dealing with tenants since I was like 10 years old. My parents, like, it's a lot of work, right? If they're like, I'm buying one more property, it might not be worth their time to incorporate, and, you know, investment income is actually taxed very high. And there's all these rules around it, right? Now, somebody else comes to me and says, you know, like for my situation, I put my first property, my two properties in corporations because I knew that I was going to have a holding company eventually, have multiple rental properties and all that, right? So if somebody comes to me, that's the advice that I would give them, right? Like if you're buying your first one and you see yourself buying more in the future, like set up the, you know, work with a lawyer, work with an accountant, and set up the structure very well from the beginning, right? Because it's easy just to go and buy it in your personal name, like to buy it in your name or my name. But again, if you want to do some more plans and stuff like that after, you can still do it, but it's more difficult. There's some legal and accounting stuff. So if you know you're going to buy a lot of properties and stuff and you're an investor and you're serious about it, you can, right? You can set up a holding company. You could have the properties under, you could have a property management company. Like there's lots of different things you can do. But again, it changes to everybody's situation, right?
Sorry, I muted myself there.
I
had the dog was running around. So yeah. Is there anything else you wanted to add before we wrapped up? Like anything, anywhere? And if people want to reach out to you, like to discuss this or anything else related to their taxes or you know, stimulus or whatever it is, where would you prefer they reach out to you?
So we have, I'll send you an email with like my email and some contact, which I did, but it's www.Cappitsolutions.Ca. We take every client. We like doing a free tax and business consultation. So if you just want to reach out to me and say, listen, like I'm thinking of doing what you said, I'm a realtor, I'm a carpenter, I own a car dealership, like this is how my taxes are set up. Me and my partner like doing free tax consultations because again, we want the client for a long time. We're not here to like have a fixed price, file their taxes and, you know, give them a kick in the ass and tell them to move on, right? We want to sort of be their sort of their business advisors, right? Yeah. And know their whole tax situation. So that's the best way to reach me. And, you know, yeah, that's the best way. And then we'll set up a meeting and take it from there.
Okay, man. I really appreciate it. Yeah. I think it's refreshing too, like, and, you know, no offense to accountants, but like, you know, a lot of them are very matter of fact. And I like that you're like a little bit more chill about it. It's really refreshing way to hear.
Yeah. That's why I don't put the suit on. I'm like, I gotta
I'm
show.
Like
yeah,
too, man. Like I always just wear like a crew neck, right? It's nice for our generation, especially, right? Because everything feels very formal when you step into that business world, and it's nice to kind of have that barrier broken where things can be a little bit social too, right?
Yeah, I think it was accountants and lawyers got the black suit, white shirt, sort of. Yeah. That's what people expect, right? I think it drives them crazy. So like you said, it's just ideal. You know, I'm an entrepreneur. My partner's an entrepreneur. We like dealing with entrepreneurs. You know, we give them business advice. For some of them, you know, like depending, we want to be in their corner, right? Like it's always good having, I give the analogy that we're sort of like a hawk. We're not in your business, but we're sort of seeing the stuff that you might miss, right? So we're just like floating around, obviously doing the boring stuff like the tax and stuff, but we want to make sure that we're there giving you the best business advice as well, right?
For sure, man. For sure.
Yeah.
Okay, buddy. Well, I appreciate your time. Honestly, I really, really appreciate it. And yeah, and hopefully something comes out of this. I'm sure it'll bring a lot of value to, especially a lot of the realtors that I've had on the channel recently, and a lot of the ones that I hope to in the future. So thank you. I really appreciate it.
Yeah, no problem. Thank you.